Hey there, East Tennessee. Lucy Hood here with Keller Williams Smoky Mountains. Just wanted to finish up our series on kind of getting ready for home buying for the first time, or just kind of exploring different home options. If you have bought before, you might pick up something new. Where I left off last time was I was talking about our debt to income ratios here. We kind of went over that a little bit, but moving right along, I wanted to talk about after you get done with determining your debt to income ratio, what your credit is, and kind of everything that else that goes along with it. We're going to talk about the different loan programs. I wanted to start out with the highest buying power. Now, when I say buying power, what I mean is when we go out and take a look at properties and you make an offer on a property, in this market, multiple offers are more common than not. So what multiple offers means is that more than just you has made an offer on that particular house. And so basically when we go into multiple offers, it means we're kind of like in an eBay bidding war, silent auction style against everyone else. Highest buying power obviously is going to be cash. Cash is king. Basically, the only stipulations the property has to meet if you're planning on buying it cash is that you want to buy it. Normally, they have a 14-day close. You don't have to have any inspections on it. You don't have to have an appraisal. It doesn't have to be structurally safe or sound. It doesn't have to have anything, just that you want to buy it. The next type of financing, because most of us can't afford to pay $100,000, $200,000 cash straight up and out, is a conventional loan. I've seen lenders do as little as 3% down. I have 5% on here just because it's a good guess, but depending on your specific financial situation, you might be able to do a 3% down conventional loan. That's just something that you'll have to talk over with your lender. Another fun fact, whenever you go to apply with a lender for your loan, the lenders probably don't want me to say this, but you are allowed to shop around to different lenders and see who's going to get you the best rate. And I believe it doesn't affect your credit for 30 days after your initial application. I've heard 90 days as well, but I'm going to go ahead and tell you 30 just so that you're safe there. But for a conventional loan, the reason that they're kind of our bread and butter is that they normally have the best interest rates. And if you have really good credit and a big chunk of money to put down, it's going to put the most money in your pocket. That's conventional. The other types of loan programs that we see often are USDA, FHA, and THDA. Now, USDA, I'll go ahead and show you right here. It is basically, it stands for the United States Department of Housing. And if it is in a certain area, if it's in a certain area that the USDA says is okay, it's 100% financing. So how you can determine if a home is USDA eligible or not is you type in USDA eligibility. You click on the one that ends in .gov, which we'll do right here. This is a great website for you just to get some more information too. Single family housing. They also have multi-units and rural business development loans. But for now, we're going to stick to residential. Single family housing guarantee, we'll hit that. We'll hit accept. Then you type in the address that you want to check. This is an awesome little house that I currently have a buyer on under contract for, and she couldn't be happier to get her family into here. So as you see, it says this address is located in an eligible area. I know that's pretty much all of Sevier County is USDA eligible. Now, as you get into Maryville, Knoxville, and parts of Oak Ridge and West Knoxville, you see anything in yellow is not USDA eligible. I like to call this little streak of white here my honey hole. And the reason is from Hardin Valley and Ball Camp Pike up north towards the river, all of these areas are USDA eligible, meaning you can get 100% financing. Now, if you don't know this area very well, it's an up and coming spot, and you might as well just be right in the middle of West Knoxville. So the fact that that still is USDA eligible is huge. And I love getting my buyers great little homes right in there. Um, so that's USDA. They do have some income limits, which if this little bar at the top of my screen will get out of my way, if you go on here, you can actually go back to single family housing and it will have income eligibility right there for you. And you do it based on state. You would choose Tennessee, pick a county, we'll do Sevier County. And then based on people in your household, students, all this good jazz, you'll fill it in and it'll be able to give you a good idea of kind of what you're looking at. The next is FHA, and probably one of the most popular. The great thing about FHA is it doesn't have to be in a particular area. All that really has to happen is you'll do 3.5% down. You want to have a decent credit score. Sometimes you can get it as low as 580. And the house has to meet certain guidelines as far as structurally safe and sound. Most homes will qualify for this. And it's a great way for you to purchase your first home. A myth that I hear a lot is if you have already purchased your first house, let's say, and you're going to buy another one, a lot of people will think that, well, I can't do another FHA loan. That's not always true. If you haven't bought or sold any property in the past 5 years, most times we can get you back into another FHA. And that really helps out a lot of people, especially with the down payment. But again, it's all based on your specific financial spot, and your lender will be able to tell you how to go about that best. Eric Nearing with Element Funding is my go-to guy. Most times he doesn't even really need to check your credit so long as you're open and honest with him. You can just have a very casual conversation about your position and he'll tell you, hey, you look great to go here in 3, 6, 9 months whenever you're ready to buy and your lease is up. Or he might tell you, hey, I'm so glad that you called ahead. This issue here is going to take us about 4 months to get worked out until you are in a position to buy. So again, this goes back to please talk to your lender as soon as possible so that, me and him can work as your real estate team to get you the best deal on the most awesome house. Last one on this page, THDA. I believe they're going to be putting more money back into the THDA account in the spring. Typically this is a state specific loan program. And pretty much what the state does is they put, let's say, $1 million into an account and it's on a first come, first serve basis. And what they'll do is they'll pay up to $15,000 for you as a down payment that you don't have to pay back so long as you live in the home for 10 years or more. Now it's first come, first serve. So when that money runs out, it's done for the rest of the year. I believe this last one ran out in August of last year and they opened it up in the spring. So if you're planning, you can couple the FHA with the THDA or USDA with THDA as well. And it can actually get you a really great mortgage payment and super, super awesome interest rate as well. There's some income limits with that one as well. It's state specific. So stay tuned. If you're curious about when it might hit again, you can go to the THDA, Tennessee Housing Department Agency.org and check out that too. Or you can give me a call. I'll probably have looked it up by then. Last loan that we are going to talk about today is the VA loan. If you are a veteran, thank you for your service. This is one of the best loans that we have to offer. It's 100% financing, just like USDA, but it also has an amazing interest rate. Most time it has the best interest rate available. A myth that I often hear is that you have to go with USAA or a certain bank or lender to be able to do a VA loan. That is not true. A VA loan is by the United Department of Veteran Affairs, and that's a federal program. So that means that any lender is capable of doing a VA loan. And again, you can shop around to see who's going to give you the best rate. With VA loans, they typically stand to stay pretty standard and around the same rate. They don't vary much. So at the end of the day, if you're a veteran, you're doing a VA loan, whoever you feel most comfortable with, that's who I would go with. One downside to a VA loan, on my part anyway, is that the VA inspector, you have a special VA appraiser and inspector that comes out and takes a look at the home, and they are very, very strict. Whereas, FHA is somewhat strict, USDA is pretty strict, VA is extremely strict. That house has got to be in top-notch shape for you to be able to get a VA loan on it, as it should be, because as a veteran, you deserve to have the top-notch house. So one downside to it, but not always. Most time we can get it worked out. And then next week, we'll be talking about actually going and taking a look at some homes. So tune in next Wednesday to check out what we've got to offer. If you have any questions or happen to run into anybody thinking about a move, hey, shoot them this video, send them my way, give me a call, shoot me a text. I'm always available and I'm always happy to help. Lucy Hood with Keller Williams Smoky Mountains. My number is 713-504-2535. I look forward to talking to you guys later, and I hope that you're having an excellent day.